Now, Rock, it's Will here in Singapore. I'm going to go against a little bit of what I know that you like talking about when it does come to miners and dividends, and I'm going to explain why. We're coming into a period where we're probably going to expect a little bit of weakness when it does come to just the general tightening cycle. So everyone is going to be hunting for yield. And I know you don't like investing in miners for yield, but when you see what Rio's done, when you see what some of the other miners are doing, and perhaps what we can expect in 2022, even if the dividends aren't as good, where are you looking? Or if I'm an investor, where am I looking to find the best potential dividend yields in the mining space?
That's a great point, Will. Just to recap my view, don't buy resource stock for dividends. Enjoy it as a consequence of being invested, but that's just the key point. Don't buy it for the dividend. So where do you look, Will? You've got to look for where dividends are increasing, not potentially decreasing. So looking where the market's going to be looking next. So in that context, iron ore looks increasingly like it's on a downward trajectory, i.e. dividends will likely be as well, therefore yield will likely be lower also. So you've got to look where there's momentum in earnings, be that copper plays perhaps, the base metal, that forward future-facing commodity grouping, even the lithium plays where they're generating more cash than they were and more cash potentially going forward. So it's about the direction of earnings and therefore the direction of dividends as opposed to what they've just paid. Because typically when they pay a record dividend, that is just it, a record year, and perhaps the next year's not going to be as high. So I acknowledge your question and I accept where do I look. So I'm looking at those second tier areas and it's probably below the radar. It's definitely not in iron ore, although you still will get large dividends. But it's just they'll be less than they were last year. So if you're chasing a share price for dividends, that's the wrong strategy in the iron ore space. But elsewhere, the coal names, will they stand out? Energy generally. Energy is so downtrodden compared to what the earnings and cash flow they're generating. If you're looking for dividend and income that's not been appreciated by the market, it's definitely in the broader energy complex, both here and probably offshore as well. But definitely not in the iron ore space.